Hey everyone, this is Richard. So I'm going to be doing just a demo today of the Elite Trader, and I wanted to periodically I'll do these demos for people. I wanted to just sort of record one so that you could kind of see what goes on in the demo. But really what I'd like to do is just show you the Elite Trader, and so that's what I'll be doing. But what you're looking at here, this is just my TradeStation platform, and so this is what I do all the development work on. And basically each chart that you see holds one of the algorithms that are traded. And again, with the Elite Trader, it trades 5 different strategies, and it trades basically one contract or one unit on each of these strategies per $35,000 in the account. And so if somebody opens an account with 35K, they would trade one unit on this one on this, and then one on the bottom ones as well. And if somebody had 70K, then they would trade 2 on each one. And so we call that a unit. So a unit would be trading one contract on each strategy. So one unit is really 5 different contracts potentially trading. Now at any given time, the most we could be in would be 4, and that would be if the bottom 3 day trades were triggering, plus this top one up here. But let me just kind of jump right in and kind of go over the charts and show you kind of what these algorithms do and what they're looking at. So before I continue much further though, let me just go over the risk disclosure. So remember that trading futures does involve substantial risk of loss. It's not appropriate for all investors. There's definitely risk involved in trading futures. This is definitely not for everyone. It should be used only with risk capital. Remember too that the results that I'm showing you are from the back-tested reports, and so pay attention to CFTC Rule 4.41, that disclaimer. And then finally, I'm not a CTA. We offer the algorithms to be traded under a letter of direction. Okay, so what I'd like to do is start with this algorithm down here. This is the longest running algorithm that I have. It's called the Day Trade Long. And this one is a momentum-based algorithm. What it'll do is it'll buy in the first 18 minutes that equity markets are open. And it'll place a trade, and then it'll usually hold until the end of the day. But it does have a stop that it'll throw out, and it's a really tight stop. It's only about $350. So what that means is that when we're right, we can have a pretty big trade because it'll go on for a while throughout the whole day. But when we're wrong, we tend to just have a small loss, like a $350 loss. And that's per unit traded. But what I want to do first is just show you this equity curve. So notice this is way back here in 97. Here's 01, this is now 2006, 2011, 2015 and onward, and then this is some of the more recent trades that we've had. But this is the longest running algorithm I have, and it's also one of the best performing algorithms I have. There's the entire trade list that we have available. We've got the performance summary, so it has a pretty good profit factor of 1.5. It has a decent number of trades in the back test, 916. Now the win rate is only 48%, so it's basically a coin flip. But again, the nice thing is when it's right, it tends to have a really big move up. And when it's wrong, it just takes a real small loss, that $350 loss. And again, so notice here on this trade list, if I scroll over, you'll see, a bunch of $350 losses. Those are from the stop outs. And then these are just gains that we saw. And as we go forward in time, closer to where we've been more recently on the S&P, then you'll see, so you'll see here's a trade where we made 3,663. We made 1,300 there, 2,400 there, 3,000 there. And so that's why this algorithm works so well, is if it's wrong, it's wrong. It just sort of takes the loss, and it's not the end of the world. But when it's right, it can just have these real monster kind of trades. And so so that's this algorithm. If we look here at the equity, or at some of the different trades we might see, let me see if I can find one. There was one. Yeah, so this is a great example of a trade from this algorithm. So notice how, and this is from the 21st of December 2022. So this is a couple months ago, but notice how it bought right in here, and then it would have had a stop just sort of right around in here, and it held the entire day, and then it got out at the close. So that's a great example of a real good trade that it had. Okay, so let's look at the Emerald long algorithm now. That's this one right here. Now, again, all these algorithms trade together, so they all trade at the same time. They trade concurrently, so that means that we could actually be in multiple strategies at any given time. But in this algorithm, in the Elite Trader, for every 35,000 in the account, you can trade 1 unit. But this is the Emerald Day Trade Long. So what this one will do is it's a little bit different than this one, because what it'll do is it'll actually get into some trades throughout the day potentially, where the day trade long is really only when the market shows strength in the morning. This one can actually get in at quite a few different times, but here's a trade that occurred on the 23rd of January of this year, and this would have been a really nice trade. Notice how we got out up here and then the market sold off, so it did the right thing by getting out. Now I'll show you the performance report of this algorithm as well, and again, this one is also a day trade, so this is the second day trade algorithm that I'm showing you. And again, this is just the Emerald day trade long, and while this is waiting, yeah, this one will have a, there we go. So here's the profit factor. It's got a 1.4 profit factor. And this is also back tested all the way back to 1995. And again, because of the max bars back, it starts the trades in around, I don't know, 97, I believe. But here's the profit factor. The win rate on this one, also about a coin flip, 50%. But it has a lot of trades in the history. And again, the good thing about this one, it also has, the winners tend to be quite a bit bigger than the losers, which is what makes it such a great algo. Here's the equity curve on this one. And again, when you're evaluating a trading system, remember, it's not just this strategy that you're looking at. You're looking at all of them combined. And I do have that, and I'll show you it at the end of this video. But this is just one of the strategies. And so this one would be kind of overlaid on top of this one. And that's the advantage of kind of diversifying across multiple algorithms. But so this is the second one though. And what I'd like to do now is show you the third one, which is called the day trade long V2. And then we'll look at the Emerald short and then the Geronimo swing trade algo. But let's look at the day trade long V2. So that's this one right here. Now, what this one does is it's actually real similar to the first one that I showed you. This is just the V2 version. Now, I'll show you this one. This is actually a losing trade, and you'll see that we got in, and then it looks like it got stopped out and took a $350 loss. So we lost $350 on this per 35,000 in the account. So it's about a 1% loss is all. It's not the end of the world, considering that we can make, you know, a couple thousand when it's right. But the difference between the V1 and the V2 is that the V2 uses a trailing stop, and then it also has a target. Now, the reason why I kept the V1 around is because it's so good, and it's just traded for so long. You know, like I said, I think since 2017, with really, I believe that's without any changes to it. So it's a really solid algorithm. I just don't want to shelve it just because I think it might do a little better with a trailing stop and a target. So what happens is over the years, you know, you watch it trade, I watch it trade, and you always wonder, well, what if I had a trailing stop? What, you know, would it do better? And so that's really what this is. It's just a taking the same code, but then adding those two things to it. Notice, I mean, the equity curve looks really great. You'll see that the profit factor is a little better than the first one, and that's again with the trailing stop and the target. You see the win rate goes up a little bit by about 5 or 6%, and that kind of makes sense. If you have a trailing target, or if you have a trailing stop and a target, you would think that the win rate might go up a little bit. But yeah, but that's basically this algorithm. Again, we could look at the trade list. I mean, there's just so much data we could look at, but every once in a while you'll see the target hit, you'll see the trailing stop hit. But that's the V2 day trade algo. Okay, so now let's look at the Emerald short algo. That's this one up here, and then we'll look at this guy, and then we'll kind of wrap it up. But this one here, this is the Emerald day trade short. And so if I zoom out a bit, you'll kind of see some of the trades that it's had. This one over here was a trade that occurred, let's just take a look at it. This would have been on the 5th of December. And this was a pretty nice trade. What happened is the market opened lower. It rallied for the first 10 minutes, then it sold off for about 30 minutes, and then it rallied for about 30 minutes because each one of these is 10 minutes. And so then it went short. So it went short right here, and it ended up getting out with a pretty nice gain. It looks like it went from 41.04 to about 40.76. So that's about a 30-point gain. Each point is $50. So this is about a $1,500 gain that we saw. And if I look at the performance report on this one, you'll kind of see how it looks. And again, this is the fourth algorithm now out of 5. And so these results just get overlaid on top of the other ones. But here you'll see all the trades listed. You'll see the performance report, again, a similar profit factor of 1.5. You'll see the win rate, again, about 50%. That's kind of normal for these kind of algorithms. Here's the equity curve though. And this one also goes all the way back to 97. You'll see in here, this is between 06 and 09, which is kind of what you'd expect because that's when we had that bear market. And so this algorithm did really good in that bear market. And but even in the bull markets we've been in, it's actually done pretty good. And that's because it's a kind of a short-term day trade algo. We have the trade list. Really anything you want to see on this, is available. This one is a newer algo though. This one went live about 3 months ago is all. So this one went live about 3 months ago. Actually, this one also about 3 months ago. And then these day trades have been running for quite a bit longer. This one since 2017. And then this one, I just made that change with the trailing stop, but the entry logic is all the same as this one. But let's look at the final algorithm now, this Geronimo swing trade. Okay, so this one, let me just start with a performance report on it. But this one is a swing trade. So what it'll do is it'll buy the S&P E-minis at as the market is closing. And what it'll do is it'll throw out a target, and the target depends on what the current price of the S&P is at. So it's kind of a percent-based target. But a lot of times it'll be this $200 target when the S&P is lower, so kind of like back in 2000. But as we get further where the S&P is trading higher, like at 4,000, then you see the gains increase. Here's a $900 gain, $500, $388. But so this one will just basically get in, throw out a target and a stop, and then whichever one is hit first, then it'll be done. So it doesn't move the target around and it doesn't move the stop. But it does have a pretty good equity curve. That's this one right here. And this algorithm is designed to do well in kind of bullish markets. And so when the market is just steadily going higher, this one will trigger a lot and have a lot of wins. Where these other four will also do good, but they're also designed to do well in kind of down moving markets. In fact, the Emerald Short really does the best in bear markets, but believe it or not, the day trade long also does really good in bear markets. So does this one over here. And so we have 3 that do really good in bear markets, 2 that do really good in bull markets. That's these 2. And then there's a bunch of overlap as well. This one here, this Emerald Long, also is profitable in bear markets, but it just not as much. The average gain per month might be lower in those cycles. But yeah, if you look here, I mean, this is basically this is basically January of this year of 2023. You can see that it has some trades, but not a ton. I mean, it really just depends. As the market is stabilizing and going higher, it'll trade more, like you see in here, like you see in here. And as the market rolls over and sells off, it just won't have as many trades. And we've seen that throughout the entire kind of bear market that we've been in. Here's basically December of 2021. And if we look here, you'll see a lot more trades as the market was going higher. And so this algorithm is designed to do well in bull markets, and it just doesn't have as many trades in bear markets. But that kind of sums up a real high-level view of each of these 5 algorithms that are in the Elite Trader. Keep in mind, though, that past performance is not indicative of future performance. All the disclaimers that we have on the website, there's risk in trading futures. It's definitely not for everyone. It should be with risk capital only. I am not a CTA. I'm what's called a third-party developer, so we offer the algorithms to be traded under what they call a letter of direction. But these are all fully automated. You don't need to load any software. It's all on the broker's server. So if you join and sign up, then you end up being on that block. And so when we do a block order buy, you're just one more trade that occurs. But everyone has their own account. There's no pooled resources or anything like that. You have your own account. It's just traded under the letter of direction, where you basically tell the broker to trade however many units you want to trade on the Elite Trader. There's a lot of advantages to automated trading. So one is that you're able to kind of remove your emotions from trading. There's still a little bit of emotions involved, but it's not as bad if you're staring at a chart and drawing trend lines and trying to wait for a pattern. You're constantly having to be on guard when you're trading like that. With an algorithm like this, because it's sitting on the broker's server, they'll just place the trade. So you're able to follow along using kind of the Gain iBroker app. And then the clearing firm will also send statements at the end of every day and at the end of every month. And so, yeah, it's all relatively easy. There's really no experience needed, but it should be definitely done with risk capital only, because there is risk for sure in trading futures. Now, I think that's the main thing I wanted to share with you, though, is this elite trader. It trades these 5 algorithms all together. For every 35,000 in the account, you trade 1 contract on each of these 5. If you want more information on the website, you'll find the tear sheet. You'll also find, if you want the combined backtest report of all 5 of these combined, we can get it to you. I also on the website have the entire trade list of every trade that we've seen from the backtest going back to 2017 is where I start that. So there's a lot of data that you can look at to do your due diligence. But overall, this is a great system. It's a futures day trade and kind of swing trade algorithm that goes long and short. And if you have any questions at all, though, go to the website, fill out one of the forms, or just call the 1-800 number. You can also shoot me an email at richard@algorithmictrading.net or sales@algorithmictrading.net. Thank you so much for watching, though, and have a great day.